Yeah, how are you?
Fine, sir. How are you?
Fine, sir.
Please start.
Yes. Hi, my dear friends. I welcome to the VCMs on today is recent developments in GST, and by the today's speaker, C.H. Undur Sudhir Garu, well known to the Vijayawada branch and as well as SARC, total all of the 45 branches also, and because of he is famous in more famous in the GST area. Last COVID years also, he crossed more than 1 lakh YouTube views recent our branch programs. Okay, and it is the 4 VCMs out of 4 VCMs we are successfully conducted 2 VCMs and on 24th and 25th. Yesterday also our branch was conducted new 26th Republic Day celebrations. Branch today and tomorrow also we are having the VCM. So tomorrow is land development under GST and relevant important judgments by CA Sanguraman Krishna Garu from Visakhapatnam. And before going to the further, now I request all the members raise for the motto song.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता
Now I request our branch chairperson CA Gadamsita Srini Garu give her welcome address.
Okay, today's speaker, C.H. Undur Sudhir Garu and colleagues at Managing Committee and other fellow members, a very good evening to one and all, and my hearty welcome to you all for the VCM on recent developments on GST. And as our Vice Chairman said, our today's speaker, Undur Sudhir Garu, is a seasonal faculty to our branch, and he has very expertise knowledge in GST. And one important thing should be mentioned here. During the first lockdown, Undur Sudhir Garu delivered series of 15 sessions on GST virtually, where the virtual programs, those are the beginning days for virtual programs, and those were uploaded in Vijayawada YouTube channel also, and it got more than 2 lakh views. And in that particular year, that was a very huge successful program for Vijayawada branch. Even after that also, he continued to work for the branch and was always willing to help for everything, whatever we asked of him, including writing articles for newsletters or budget memorandums and whatever it may be. And I want to express my gratitude to you on behalf of Managing Committee, sir. Thank you for your assistance. And coming to today's topic, major program changes, major important changes happened during the last 3 to 4 months, which are very useful for our regular GST practice, to throw light on those amendments and circulars and whatever it may be, we planned this program. Thank you. Kindly make use of today's session. Thank you.
Thank you, Chairperson Garu. And now I feel it's privilege to introduce our today's resource person, C.H. Undur Sudhir Garu. He is the chartered accountant by profession. He has been consistent topper at the school and college level. He has completed both CA and CMA at the young age of 21 years. His achievement during the study, India's 6th rank at final level and All India 43rd rank at ICW level, and received Pratibha Award from the AP State Government and in intermediate, and district first ranker in intermediate level. And he is also achieved in the professional level, gives various GST seminars for accountants and chartered accountants. As of now, he is presented GSTR 9 and 9C in more than 20 plus seminars. And he has also taken CPHS at Vijayawada, Eluru, Gunturu, Kakinada, other branches of southern region. And achievements in professional teaching deal with direct and indirect taxes to CA and CMA final students from past 6 years. Taught to over more than 5,000 students as of now as a faculty, and he is YouTube and already our chairperson was shared that about the YouTube one. And at present he was a member of Indirect Taxes Committee of AP Chamber of Commerce. With this brief introduction, now I welcome to the C.H. Undur Sudhir Garu today's session. And now session is yours, sir. You can go on.
Yes, sir. Hi, hello, everyone. So I wish a good evening to all the viewers. So we are here to have a session on this GST latest developments. So once again, I thank initially Vijayawada branch for giving me this opportunity to have a discussion on this GST latest developments. The recent developments which I am going to discuss now have a more impact on our chartered accountants basically, because at the end of the December, usually when the new year begins, if we get a new news, good news, we feel very happy for the entire year. So the same thing has been done by CPIC at the end of December. So on 27th December, they have introduced a circular called circular number 183. So which gives a scope of practice to the chartered accountant also. So to how far it is useful to us and what are the procedures to be followed for the purpose of verification. And what are other recent developments that have come place in GST? Those aspects are. Now let us have a discussion. Yes, sir. Is the screen visible?
Yes, sir. Fine.
Yeah, now beginning with the latest developments. So here if you see the difference of ITC, GSTR 3B versus 2A, let me begin with this amendment initially, because this has a most trending aspect from the past 1 month from December ending onwards. Here if you see difference of ITC, GSTR 3B versus 2A for the financial year 17-18 and 18-19. These are the 2 years which we have faced various issues, because for those 2 years also.
Excuse me, sir. The screen is it is displaying, but it is not rolling.
It is in the first page, first slide itself.
The first slide you have to click on. Yes, sir.
It's moving.
Is it changing, madam?
Yes, sir.
You can put the option of slideshow. And,
the slideshow only I have put.
It's not appearing that.
They are in the first slide only.
ఇప్పుడు అపేర్ అవుతుందండి డిఫరెన్స్ బిట్వీన్ ఆఫ్ ఐటీసీ జిఎస్టీఆర్ 3B వస్తుంది, కానీ అయితే ఒకసారి ఆఫ్ చేసి ఆన్ చేయండి, దెన్ ఇట్ ఈస్ సెట్ రైట్ అవుతుంది.
Fine, sir.
Okay.
డిఫరెన్స్ ఆఫ్ ఐటీసీ కనపడుతుంది కానీ స్లైడ్ షో ఫార్మాట్ లో లేదు.
ఇప్పుడు చూడండి. So let us continue. Aslantu ఇది కనిపిస్తుంది కదా సార్, మెయిన్ స్లైడ్ కనిపిస్తుంది.
Yes, you can continue.
Slide
Okay. So for the financial year 17-18 and 18-19, so initially, so we have faced various issues. Even now we don't have certification in GSTR 9C, but in the initial years 17-18 and 18-19 and also 19-20, for these 3 financial years, the chartered accountant should give a certification of all the compliances in GST Act, which also include the difference between GSTR 3B and 2A. So there are many purchase invoices where the SSEs have claimed ITC based on their self-assessment initial, based on their purchase bills, based on their own books of accounts. So all the SSEs might have claimed their ITC. Because from October 2019, that means financial year 19-20 onwards, the concept of GSTR 2B has come into existence. Prior to that, all the SSEs might have claimed ITC based on self-assessment. But most of the suppliers have not uploaded the invoices in GSTR 1, so that the recipients were unable to get the invoices in GSTR 2A. Since the invoices were not reflected in GSTR 2A, many of the officers have issued notices to the SSE that there is a variation between GSTR 3B and 2A, which led to lot of notices given to various SSEs. Even now also for financial year 17-18, 18-19, for many of our clients also notices were being received. Because the act being initially introduced in the financial year 17-18, from July 2017 onwards, the act has been introduced, where the procedures have been specified in such a way that initially they have introduced GSTR 3B to file summary return. Later on, GSTR 1 due dates were extended. Before filing GSTR 1, first department has initiated to file GSTR 3B and pay taxes first. Later on, you can file GSTR 1, they have said. There, many of the SSEs have forgot to file many of the invoices. Or some of the SSEs might have uploaded B2B invoices in B2C. Of course, they might have paid the taxes, but those invoices were not reflected in GSTR 2A to the recipients. If the invoice is not reflected in GSTR 2A, the assessing officer, that means the superintendents or commercial tax officers, whatever may be, they were not allowing credit to the SSEs. That means which leads to a huge difference between GSTR 3B and 2A. So keeping this in view, earlier there are some general conditions which were specified in section 16 that there must be original invoice initially. Initially there must be original invoice. So every SSE might possess the original invoice because original copy might itself be given to the consumer. No? That's why original invoice will always be there. Second condition is that receipt of the goods. Unless the goods are received, SSE cannot avail ITC account. So the second condition that was specified here is goods must be received by the SSE. Though that one is also very easy to claim because unless the goods are received, we don't enter in our books of accounts. Third condition is payment to the supplier. We have to make payment to the supplier. Rule 37 has been introduced from July 2017 onwards, which has specified that payment has to be made to the creditor within 180 days from the date of invoice. Maximum time period. Actually, they might have their own credit periods, but maximum time period which was specified in Rule 37 is 180 days. Within 180 days, we have to make payment to the creditor. If we don't make payment to the creditor, then our input gets automatically, we have to reverse the ITC. Automatically means we have to reverse on our own. It becomes ineligible. ITC becomes ineligible. Even though we might have availed ITC at the time of invoice itself, after completion of 180 days, if we don't make payment to the creditors, we have to reverse on our own. And again, whenever we make payment, we can reclaim the ITC. This is the procedure. So these three conditions were easy to follow. We have to have original invoice. We have to receive the goods. Number 3, payment has to be made to the supplier. These three conditions were easy to solve. But if you see the fourth condition, supplier should pay tax to the government of India. This is what important. Supplier should pay tax to the government of India. Here, if the term has not been used, tax should be paid to the government of India, it might be easy. But the condition that was specified here is supplier has to pay tax to the government of India. So here, supplier means the creditor. For example, if you are the seller and I am the buyer, if I am going to purchase goods from you, goods value 1 lakh rupees, GST 18%, 18,000. Let us assume total 1,18,000. If I am going to purchase the goods from you, that means you are the seller, I am the buyer. What I usually do, I will make 1,18,000 rupees payment to you. What you have to do, you have to retain 1 lakh with you and you have to pay 18,000 to the government of India. Only when you pay 18,000 to the government of India, for me, ITC will become eligible. If you don't pay 18,000 to the government of India, for me, 18,000 will become ineligible. Because the condition that was specified here is supplier should pay tax to the government of India. So how the supplier usually pays tax to the government of India? First of all the B2B invoices should be disclosed in GSTR 1. Later, all those summary will get displayed in GSTR 3B. So taxes will be paid in GSTR 3B, but invoice will be uploaded in GSTR 1. Only when it is uploaded in GSTR 1, it gets reflected in GSTR 2A. Based on that GSTR 2A, we will be eligible to avail ITC. But during 17, 18, 18, 19, due to ignorance by many of the clients, it may be a accountant's mistake or client's mistake or chartered accountant's mistake, whatever may be, many have not uploaded the invoice in GSTR 1. If you have not uploaded the invoice in GSTR 1, recipients also didn't get displayed in GSTR 2A. If the invoice is not reflected in GSTR 2A, simply officers were issuing that there is a difference between 3B and 2A. Unless you have get invoice displayed in GSTR 2A, we cannot give you ITC, and they are simply giving show cause notice. Show cause notice is converted into orders. Based on that orders, many of the SSCs have went for appeals also. Even appellate authority also, they were simply saying that there is no standard instruction given by CBIC, so we can't do anything. For 3B 2A differences, we are also issuing notices. Simply they are specified earlier. For all these problems, now we got a full stop. For all the difference between GSTR 3B and 2A, the CBIC has put a full stop. That means it's very favored decision for us. So what they have given the decision. Earlier, 3 types of mistakes were done by the suppliers. These are the 3 types of mistake, various permutations done by the supplier. Based on these mistakes, recipients were ineligible. They didn't get reflected those invoices in GSTR 2A. What are the mistakes the suppliers have done earlier? GSTR 1 is not filed, but 3B has been filed. Many of the suppliers still they didn't file a GSTR 1 for that financial year, but they might have filed a GSTR 3B. So 1 is not filed, but 3B has been filed. If 1 is not filed, how will they get invoices reflected in GSTR 2A? But they have promptly paid taxes in 3B. But it was not displayed in 2A to the recipient. Second problem is GSTR 1 and 3B were filed. But what is the problem here? But they have shown in B2C. Actually, this is B2B invoice. They have to show in table 4, actually B2B in GSTR 1. But they have shown in table 7. In B2C, they have shown. What happens here? Here also tax is paid to the government, but those invoices were not reflected in GSTR 2A to the recipient. And the third issue that has been faced here is both 1 and 3B were filed but shown in wrong GSTN. Actually, you are the seller and I am the buyer. You have to upload my GST number. But by mistake, another person GST number has been uploaded. What it leads to? To them, in their 2A, it is reflected, not in my 2A. Sir, here you have filed in GSTR 1, but you have quoted wrong GST number. Here also in my 2A, it will not get reflected. These are the three cases where the suppliers have done mistakes. You might have paid tax in all the three cases. Common point is it was not reflected to the recipient. And another common point is tax has been paid by the supplier. Supplier is paying tax in GSTR 3B, but it has not got reflected in GSTR 2A because in one they have filed mistakes or they have not filed one at all. Whatever may be the case, in all these three, who is suffering is recipient is going to suffer because in GSTR 2A for him it was not displayed. So for all these issues, a conclusion has been given by the CBIC. What it has stated is whenever you have differences in ITC, CBIC has given clarification in circular 183/15/2022. So in 2022, this is the 15th circular. Overall, this is 183rd circular. In 183rd circular, what they have clarified is if the difference of ITC means difference between 3B and 2A. If the difference of ITC is greater than 5 lakhs or if the difference of ITC does not exceed 5 lakhs. Sir, here 5 lakhs means we have to see creditor wise. Here 5 lakhs we have to see creditor wise. Creditor wise means sir, I have total 3B versus 2A difference is 12 lakhs. Let us assume total 3B versus 2A difference is 12 lakhs. Out of which total 12 creditors have not uploaded my invoices. Each one ITC amount is 1 lakh, 1 lakh, 1 lakh. Total 12 creditors have not uploaded. Here, each creditor you have to apply this limit of 5 lakhs. Total difference is 12 lakhs, 3B, 2A. But each creditor, if it has exceeded 5 lakhs, if only one of the creditor is there, it's 10 lakh rupees, another creditor 2 lakh rupees. Then what we need to do? For those differences which exceed 5 lakhs, they have to obtain a certificate from a chartered accountant or cost accountant having UDIN. A certificate has to be issued by a chartered accountant. In which case, if the ITC difference is greater than 5 lakhs, this 5 lakhs is aggregate ITC or supplier wise? Supplier wise we need to see. That supplier has not uploaded 10 invoices, sir. Those 10 invoices in aggregate, for each supplier we need to see. Each supplier ITC difference, if it is greater than 5 lakhs, if a chartered accountant gives a certificate, even though those invoices were not reflected in 2A also, even though those invoices were not reflected in 2A also, recipients can avail ITC. So here a sample certificate I am going to show to you. After the end of this session, I will share those sample certificates to you also. So here is the sample certificate. So which who has to issue this certificate, sir? The chartered accountants have to issue this certificate. While circular number 183/15/2022 dated, CBIC has prescribed a procedure for verification of ITC. Sir, this ITC difference, if it exceeds 5 lakh rupees, chartered accountant has to certify that the creditor, that means the supplier, has paid the tax to the government of India. Even though those invoices were not uploaded in GSTR 1, let me read the certificate line by line. The ITC claimed by a registered taxpayer, the supplier have failed to furnish the correct details in GSTR 1, which led to certain deficiencies, discrepancies in GSTR 2A of their recipients. That means supplier has not filed GSTR1 correctly. This invoice has not been uploaded. For recipients in 2A also it is not displayed. The circular amongst other requirement requires such a recipient of ITC to produce before the jurisdiction authority a certificate from a chartered accountant or cost accountant who has specified that a chartered accountant certificate is necessary. The circular 183/15/2022 has clearly clarified that a chartered accountant if certifies if the aggregate claim exceeds 5 lakhs in a financial year. This 5 lakhs is from each supplier, not from aggregate of all the suppliers. Each supplier aggregate we need to see. That means total there are 12 suppliers who have not uploaded, sir. Okay. Supplier wise, if it is greater than 5 lakhs, in cases where the difference is greater than 5 lakhs, in those cases only supplier's chartered accountant has to issue this certificate. Supplier, from each supplier, from only one supplier I have purchased 10 invoices, sir. Those 10 invoices in aggregate we need to see. So supplier wise aggregate, if it is greater than 5 lakhs in a financial year, then what supplier has to do? If he has done mistakes in GSTR1, he has to approach a chartered accountant and chartered accountant has to give a certificate. Sir, when will a chartered accountant give certificate? Here we have to follow some guidance. So what a chartered accountant is going to do? Sir, ultimately, government has to receive tax. For here, what we need to see is the books of accounts of the SSC. Here, if you see, in terms of requirement of the circular, here SSC name we need to write. In terms of requirement of the circular, for example, ABC and company, let us assume ABC and company has approached us for issuance of the said certificate and have produced the following documents in this regard. So, for example, if you are the seller and I am the buyer, for whom ITC has been denied? To the buyer. For me, ITC has been denied. And you are the seller. Now you have to issue me certificate. If the amount is less than 5 lakhs, if the ITC difference is less than 5 lakhs, self-certification from you is enough. If the amount is greater than 5 lakhs, then you, supplier, you have to approach a chartered accountant. You have to approach a chartered accountant. That chartered accountant might not be your statutory auditor only. Any chartered accountant you can approach. Such a chartered accountant has to verify your books of account and your GST returns and check whether the tax on these invoices is paid to the government or not. Simple certification by chartered accountant does not allow credit. Chartered accountant has to verify the books of accounts. What a chartered accountant has to verify? Here, if you see, in terms of requirement of circular, the client has approached here. Client means creditor name has to be there here. Has approached us for issuance of the said certificate and I have produced the following documents. Here, list of records we need to write. Sale register of the SSC. Sale invoice copies of the SSC. Here, supplier chartered accountant has to issue this certificate. No. So, supplier books of accounts, what you have verified and come to a conclusion that this tax has been paid to the government, you need to see. Even though the supplier has not uploaded in GSTR1, we are saying that he has paid taxes in 3B. That means in GSTR1, he might have uploaded this in B2C. That month in books of accounts, what is the turnover has been reflected. And in GSTR1 and 3B, how much tax he has paid. Both the things the chartered accountant should verify. And he has to give you a certificate along with the UNIN. Then the recipients get eligibility to avail ITC. Here, if you see, the supplier name is a registered person having GST number and his principal place of business in the state of. The supplier has given us understand that he has made supplies to the creditor name, buyer name here we need to write. For example, you are the seller. Here your details I am going to write. And I am the buyer. Here my details they are going to write. Who is a person with registered number. Date, invoice number, GST number of the buyer, taxable value, tax, month in which tax is paid in 3B. This is very important. Because here what we are saying is even though the supplier has not uploaded in GSTR1, we may chartered accountant is certifying that tax has been paid in 3B. So in which month turnover they have included and paid tax. That's what we need to verify in books of accounts of the assessor. And that month of payment, even though the invoice is in December, if the payment is made in March, so December 2017, March 2018, here we need to write March 2018. Here December invoice date we need to write. The supplier further provides that the details of following invoices were furnished or wrong, were not furnished or wrongly furnished. Sir, not furnished means have not uploaded in one at all. Wrongly furnished means wrong GST number is entered. So in these two cases, here we need to write the reason: date, invoice number, value, tax, the status of GSTR1, whether it is not furnished or wrongly furnished. Here we are going to write. If wrongly furnished, in whose GST number it is uploaded, and they should not have an ITC again. In whose GST number it was uploaded wrongly, those details we need to write. Sir, who is going to give this certificate? Chartered accountant is only going to give this certificate. It is further stated that the supplier that GST on the above supplies has been duly and correctly furnished by him. This is what a chartered accountant is certifying. Very, very important paragraph. Unless we verify books of accounts, we should not certify like this. We have to completely, thoroughly verify the books of accounts. The liability in books of accounts, whether it was cleared in GSTR 3B or not, we have to exercise our intelligence here. It is further stated that by the supplier that GST on the above supplies has been duly and correctly furnished by him as detailed in para 4 above. The supplier understands and undertakes that the declaration and payment of tax in relation to any supply in terms of CGST and SGST Act and rules is the responsibility of the management of the supplier, including preparation and maintenance of all the documents. So invoice preparation, document maintenance, books of accounts maintenance is complete responsibility of the supplier. Then what the recipient is going to do here is recipient is going to certify whether it is that means a chartered accountant is going to certify whether those payments were correctly made or not. Here we are going to certify. We conducted our examination. We means the chartered accountant has conducted our examination of the statement in accordance with guidance note. So this guidance notes actually regarding this 3B versus 2A, further new guidance notes also will be issued by ICAI. But before that, based on already issued guidance notes by ICAI, that reference SQC, Standard on Quality Control SQC 1, we are going to perform the audit. Those matter we are going to write here. Based on that, what is our opinion? Whether tax has been paid or not, we are going to state here. Here, if you see, based on our examination as above and information and explanation given to us, in our opinion, that means chartered accountant opinion, whether it is in conformity with the books of accounts or not. That means the GSTR 3B, the tax liability paid by him, is in conformity with the books of account or not. Here we are going to see. We further certify that the good produced before us, the goods have been supplied by the supplier to the buyer, whether the goods have been sold or not. We certify that in 3B and other records produced, the tax has been paid by debiting the cash ledger. So whether the tax has been correctly paid or not, we are going to certify. No, sir, if there are any complications, here we are going to give our qualified report. So opinion, we are going to express our qualified report here. That means any qualifications, any discrepancies found during our audit, there we are going to mention. Next thing here is the certificate is addressed and provided to the jurisdiction officer as a limited purpose. The certificate only for the purpose of the circular 183 bar. The certificate is not issued for any other purpose. Here the chartered accountant is going to put a signature. So this is the format. This is just a recommendatory format. Additionally, if you want additional points, till any perfect format introduced by ICAI, till now a format has not been released. Based on the circular issued by the department, here a draft has been given to you. This is just a suggestible format. Any other additional points, if you want, you can add here also. So now coming to the next thing, this is the suggested certificate. After the end of the session, I will share the suggested certificate also to you. So that now recently also, sir, last week also, so one certificate we have initiated in one of the case. Based on that, in appellate proceedings only, they have passed in favor of the SSC. So in favor of the SC, order has been passed. The circular has such power because those are binding on the department. They have to follow. It might be appellate authority, it may be normal officers also. For all the pending proceedings, this circular will be applicable. If the proceedings were already closed, then we can't do anything. Already 3B2A difference notice is given. SSC has paid taxes also. Order is issued. SSC has paid taxes also. When the proceedings were closed, we can't do anything. If the proceedings were pending before the officer, or not only officer, if the proceedings were pending before the appellate authority also, even if it is pending in appeal or if it is pending before officer, then this is the suggested certificate issued under this circular 183/15/2020. So based on this, a suggested format is given. At the end of the session, I will share you the certificate also. So this is a case where the difference is greater than 5 lakhs. Who has to certify this one? A chartered accountant has to certify this one if the difference is greater than 5 lakhs. Now coming to a case where the difference does not exceed 5 lakhs, self-certification by the supplier. Here regarding self-certification also, so one format I have. Now I am going to give you another draft regarding this. Yeah. So this has to be taken in the letterhead of the supplier. Last I have shown you one certificate which has to be taken in the letterhead of the chartered accountant. But now this one has to be printed in the letterhead of the supplier. Wherever the difference between 3B versus 2A does not exceed 5 lakhs, the difference between 3B and 2A does not exceed 5 lakhs, then self-certification by the supplier is enough. So what the supplier is going to certify, let us see here. Sir, one thing to be remembered here is, in any case, it's a chartered accountant certification or supplier's own certification, both the cases. One common thing here is tax must be paid to the government. One common thing to be noted here is tax must be paid to the government. In GSTR 3B, he might not have uploaded in 1, but in 3B, if promptly taxes were paid, then it is enough for the department. If it is greater than 5 lakhs, if a chartered accountant certifies, it's enough. If it is less than 5 lakhs, based on self-certification by the supplier, they have given this one. Let us go through this. We, that means the supplier, holders of GSTN, having principal place of business and allotted to jurisdiction officer name, here we are going to write that we have supplied the goods or services via our invoices in the annexure. So at the end of this one, here we are going to give the annexure. This is annexure. Invoice number and date, taxable value, IGST, CGST, SGST cess. This invoice is issued. This tax has been paid, but this invoice is not uploaded in GSTR1. If this invoice is not uploaded in GSTR1, then what happens? That is the case which we are going to discuss here. Yeah, that we have supplied the goods by our invoices given in the annexure. List of invoices we are going to give them. That in respect of invoice mentioned in the below annexure, we have not filed GSTR1. This is one of the case. Or here another case, we have filed GSTR1 and 3B, but we didn't report in GSTR1. Sir, first case is if the supplier didn't file one at all, but tax has been paid. Sir, one common point I have said no. Even though you have not uploaded in GSTR1, but you have to pay taxes in GSTR3B. We have not filed one, but it has been paid in GSTR3B. This is the first case. Our second case is we have filed one, but this we didn't report. This is the second case. Now coming to the third case, in respect of invoices mentioned, wrong GST number has been given. We have uploaded in B2C instead of B2B, wrongly reported in B2C. First case didn't upload at all. Second case, we have uploaded one, but in GSTR1 we didn't reflect. Third case, in B2C we have shown, or in B2B, wrong GST number. This is the fourth case. Here if you see, in wrong GST number we have reported. So any one of the para we need to select, sir. 4 paras I have given you. 1, 2, 3, 4. 4 paras I have given you. Where the supplier has done mistake, that one only, that para only he is going to select. This certificate is issued to the aforesaid registered person only for the difference in ITC availed in 3B as compared to 2A for these 2 financial years, 17-18 and 18-19. Only for these 2 years only this certificate will get perfect. For remaining years, the certificate will not get perfect. Only for those 2 years, 17-18 and 18-19 only, this certificate is going to get perfect. This certificate is issued to the registered person only for the difference in ITC availed in 3B for these 2 years only. 1920 onwards, compliance with GSTR 2B is mandated. So as per this circular, we do declare that whatever stated above is true, best in our information and belief. So signature of the authorized person. Here is a list of invoices. The supplier is going to put a stamp and he is going to sign. This is nothing but a self-declaration given by the supplier. The supplier is going to give self-declaration. So here if we come back to our presentation now, if the difference between 3B versus 2A is greater than 5 lakhs, then chartered accountant should certify. That format I have shown to you. If the difference does not exceed 5 lakhs, self-certification by the supplier is enough. That certificate also I have shown to you. Now coming to the next one. Applicability. For which finance year this is applicable? In certificate itself, I have shown you many number of times. This is applicable only for the financial year 17-18 and 18-19 for the ongoing proceedings only. For the ongoing proceedings only, this is applicable, and not to the completed proceedings. If the proceedings were already completed, we can't do anything. Already order is also issued. Now we can't do anything. Only for pending cases only this is applicable. However, these instructions will apply only in those cases for the 17-18 and 18-19 where any adjudication or appellate proceedings are still pending. Here if you see the term where the appellate proceedings are still pending, that term has been used here. Only if it is pending only, then only this case will be applicable. That means for the completed proceedings we can't do anything. Only for the proceedings which are in pending state, so we can follow this circular number 183. So this is the first amendment which I have discussed. This is the latest development in GST which I have discussed. This circular number 183, based on which ITC has been availed by the SSE for the financial year 17-18 and 18-19. For the financial year 17-18 and 18-19, those aspects I have discussed to you. 1920 onwards, compliance with 2A and 2B is mandated. Their certifications also does not have a role. During initial years only, 17-18 and 18-19, many have done various mistakes at the time of filing GSTR1. Keeping that in view, the government has initiated these aspects. So till here, we have completed first amendment. Now let me enter into further amendments. Circular number 183 I have completed. So now I am going to enter into circular number 184. This circular I am going to directly present you based on the circular released by CBIC directly. Circular number 184. In 2022, this is the 16th circular. Overall, this is 184th circular. Clarification on entitlement of ITC, sir. Earlier concept which I have discussed, circular 183 is universal aspect, which is useful to all of our clients. But this one, this is specifically to some extent only to some clients only. This will be useful. Clarification on entitlement of ITC where place of supply is determined under IGST Act. So entire place of supply rules have been given in IGST Act only. So in that IGST Act, what they have given clarification here is where the place of supply is outside India. That means through a goods transport agency or any transport contractor, I am sending goods from India to Australia. In this case, if the transporter is located in India, even though the goods were sent outside India also, here the place of supply becomes outside India only, and IGST is liable to be paid because the supplier and recipient both are located in India. If the supplier and recipient both are located in India, even though I am exporting the good outside India also, the place of supply will be outside India only. That means supplier located in India, place of supply is outside India. That means two different states. In this case, what is the which GST they need to pay? IGST is required to be paid. Whether that IGST can be claimed as ITC, that is the question which is been arised here. If you see the clarification on entitlement of ITC, where the place of supply is determined as per subsection 8 of section 12 means where the place of supply is outside India, where the supplier and recipient are located in India. Both the supplier and recipient are located in India. Supplier means transporter and also the service recipient are in India, but transportation is done to a place outside India. In this case, which GST is required to be paid? IGST is required to be paid. Whether that IGST can be availed as ITC, answer is yes, we can avail it as ITC. Here, even though the place of supply is outside India also, then here comes to a conclusion that whether we can avail ITC, yes. Whether this is an interstate supply, yes, this is interstate supply, and they would charge IGST only. Whether that IGST can be availed as ITC, a simple clarification has been given that it would be eligible to take ITC of IGST even though we are exporting the good to foreign country. We are liable to pay IGST. That IGST can be availed as input tax credit. Sir, if recipient transporter is located outside India, then it becomes export of service which is zero rated supply. That's not I am discussing here. This is not a zero rated supply because both the supplier and recipient are located in India. I have given contract to export the goods to a supplier in India. To the Indian transporter only I have given contract. In this case, the place of supply is outside India only, but IGST is required to be paid. Whether that IGST can be availed as ITC, yes, you can avail this IGST as ITC. That is a clarification which was given in this circular. Even here, which state code we need to upload means, since it is the place of supply, it's outside India. So here the transporter has to upload the state code 96. That means foreign country state code they are going to select. For all the foreign countries, GSTR when we need to select state code now. For example, Andhra Pradesh 37 state code will come. So Telangana 36 state code will come. So like that here, which state code we need to select means out of country 96 state code we need to select. The supplier has to upload in GSTR 1 by uploading a state code 96. Here the recipient, if he pays under reverse charge, also he can avail ITC. If supplier charges also, he can avail ITC. That is what the clarification given here, that whether they are entitled to ITC means, yes, they are entitled to ITC. They have given the clarification. So this is the first thing which we need to remember. So now coming to the next amendment, circular number 183 and 184 we have discussed. So now let me give you one more clarification based on circular 186. So what are the cases where which is useful to our chartered accountants to suggest our clients? Those aspects I am making a special focus here. So this is circular number 186 which we are going to discuss now. Taxability of no claim bonus offered by the insurance companies. Here for us also this might be useful because for car also we usually pay insurance, car insurance. Even we have our own cars, on own car insurance, we are going to pay insurance premium. That insurance premium, sir, if we don't claim at all during the last year, they are going to give us no claim bonus. For example, if insurance premium is 15,000 rupees, premium to be paid, insurance coverage is 5 lakhs, let us issue. No, per annum premium I am paying 15,000 rupees based on the value of the car. Now, if my car do not apply for insurance claim at all. There is no accident at all during that year, and I didn't apply for insurance claim at all. Then what happens in this case? If there is no insurance claim in that entire year, it is benefit to insurance company. No, they didn't give any claim. No. So next year premium they will reduce. No claim bonus, 1,000 rupees or 2,000 rupees. They will give us discount indirectly speaking. That is nothing but no claim bonus. For example, if the premium is 15,000 rupees, no claim bonus 2,000 rupees, net amount is 13,000 rupees only. Now, on which amount they should charge GST? On 15,000 or 13,000? That is the question which is being raised. Whether no claim bonus is liable to GST or not, that is the question which has been raised in general. What they are usually doing is 15,000 rupees plus GST. On the total, they are reducing no claim bonus. That means GST they are charging on initially. So whether this no claim bonus, GST will get attracted. What they have given clarification is, this is nothing but a discount. This no claim bonus means nothing but a discount. This is not a supply at all. We have to reduce that one, and on the balance portion only we have to levy GST. That means out of 15,000 premium, if 2,000 is a no claim bonus, reduce the 2,000. Now what is the balance? If you reduce the 2,000, balance 13,000. On the 13,000 only you levy GST. That is what they have given clarification here. So no claim bonus, taxability is not there. This is not a supply at all. It is therefore clarified that there is no supply provided by the insurance company. It is not a supply at all. And on no claim bonus, GST will be levied or will not be levied? Will not be levied at all. That is what the clarification given by the department there. This is nothing but a discount. Whether we can say it as a discount? Yes, they have given clarification that yes, we can treat it as a discount. It is therefore clarified that no claim bonus is a permissible deduction. We can reduce that one for the purpose of calculating the value of the supply. Accordingly, where the deduction on account of no claim bonus is provided, is issued, GST shall be levied on the actual insurance premium amount payable by the policyholder after deduction of no claim bonus. That means no claim bonus is benefit to the SSC. We have to reduce that one. No claim bonus must be reduced. On balance 13,000 rupees. If you take my example as the base, on balance 13,000 rupees only we need to pay GST. That is the clarification given, which is very, very useful to us. Next. Sir, above clarifications which I have given earlier, circular number 183 or 184, whatever may be, 183 circular clarification, those are the cases for forward charge. That means where the supplier liable to pay tax. If the transaction is covered in reverse charge, here the complete responsibility is on the recipient. Recipient should pay tax on his own and he has to avail ITC. Those certifications were mandatory in a case where supplier is required to pay tax. If it is covered under reverse charge mechanism, those circular 183 need not be followed at all. Since a query has been raised, I have given an answer here. Those who are having queries, you can post your queries in chat box. At the end of the session, I will have a complete discussion on those aspects. Now coming to the end, another clarification on e-invoice. Regarding e-invoice, one clarification has been given. Sir, e-invoice is not applicable for banking companies. For banking companies, they have given exemption for e-invoice. But banks usually along with that, they provide some intermediary services also. Here, if you see, a banking company is providing banking service, may also involve in making supply of some goods, including bullion. Banks usually, some of the banks will sell bullion also. That means banking companies, e-invoice is exempted only for banking services or for all the cases. Here a clarification is given that for all the supplies, e-invoice is exempted for banking companies. Now, practically for which SSCs e-invoice is applicable? If the turnover exceeds 10 crores, 5 crores is not yet introduced, sir. Many were still in a dilemma that whether 5 crores is applicable from 1st January onwards. No, that is not applicable. This concept has come into existence from 10 crores only. That means from 1st October only they have introduced 10 crores. 5 crores limit has not been notified yet. Whether it is not, will get notified from April or not, we need to see. Till then, the limit is 10 crores only. if the amount exceeds 10 crores turnover during any of our previous years, 17, 18 onwards, etc., if it exceeds, then we need to follow that one. The turnover is greater than such amount, then we need to go for those aspects. E-invoice has to be followed. That e-invoice, we have banking company as exception. That means for banking companies, e-invoice is not applicable at all. For banking companies, e-invoice is not applicable at all. Not only for banking services, for all the services provided by the banking companies, e-invoice is not applicable. That is the clarification given in circular number 186. So now let me come for next thing. All the latest developments directly in circular itself, I am showing to you for the purpose of getting more clarification to us. So now let me come for notifications. All the recent circulars introduced were being discussed. Now let me come for notification. Let me share you the notification. Yeah. So here is the notification. Central tax notification 22/2002 released on 15th November. In GSTR 9, some changes have come. 30th November, 30th November, 30th November. In some of the tables, 30th November has been stated. Earlier, it's before the October month. Whenever the SSC has forgot to upload any invoice in GSTR 1 or he didn't avail ITC, maximum before next year September SSC has to avail. September month return, they usually file 3B by October 20th. No? By October 20th, they should have availed ITC. But now the date has been changed to 30th November 2022. It may be GSTR 1 changes. It may be 3B ITC changes. All the things have to be done before 30th November 2022. Date has been given, not the period. What many people were doing is April to September is specified earlier. No, September month return belatedly they are filing. All the mistakes they are trying to rectify and file GSTR 1 of September month belatedly. They are filing in December or January with late fee, of course. But here, unless the supplier files within the time, recipient ITC will get affected. No, that's why date has been specified now. Whatever may be the month, even April month return you file belatedly also. The term that was used here is November 30th. November 30, the term has been used here. It may be your April month return, May month return, June month return, whatever may be. Now we don't bother at all. Now what you need to do is by 30th November, you have to upload. By 30th November, you need to, that might be, if it is a sale. Before 30th November means if you upload in November month, it will get reflected in December month to the recipient. That means in October month itself, you have to amend that month. Many people have done in November. It is ineligible. If you have uploaded in November, it becomes ineligible. So maximum by which date we need to upload is October month only. ITC, it is your case. If you have filed October month return in November 30th, we don't want. Here, month of filing is not criteria. What they have given here is date. By that date, if recipient get displayed in 2B, he can avail. By that date, if it is not reflected, recipient cannot avail ITC. For recipient to get reflected before 30th November, SSC suppliers has to upload in October month return itself. If you upload in November, it gets reflected in December. For recipient, ITC will become ineligible. That means even though the date specified there is 30th November, suppliers have to upload in October month itself so that by 30th November for recipients to be, it will get reflected and they avail ITC. So in all the cases wherever earlier date April to October is given, the dates have been changed in GSTR 9. Of course, now GSTR 9 due date is also completed. So all the persons might have filed their GSTR 9. But since there is an amendment, I have given you a clarification. And there are many clarifications regarding the registration process. Now let us have a discussion on that one. Yeah. registration process. Initially, that this was introduced in Gujarat state. Slowly, this will get introduced in other states also. Registration process has become very complicated nowadays. Anyone having queries, the session which we have discussed, you can post in a chat box. At the end of the session, I will give you clarification regarding all the issues which were raised in the chat box. Around 30 more minutes, we have some more amendments for discussion. After completion of those amendment discussion, I will give a clarification on the queries raised in the chat box. So now coming to the latest updates in GST registration process. So here, if you observe, validation of email and phone number from PAN data in income tax website. Practically now, at the time of applying for GST registration, at the time of applying now for GST registration now practically. So what we are doing is we are uploading the invoice in the while applying for registration. Email ID and mobile number, whatever SSE is specifying, that we will give. Authorized representative directly email ID, phone number we usually give. But now that is not possible. In income tax website, of course, in all the states, this is not it is not applicable. Now, initially they have made applicable in the state of Gujarat. Slowly in remaining states also, this will get applicable. Because due to fake registration, sir, recipient ITC is being denied. That's why for all the SSEs, they are not allotting GST registration simply. Due to many of the fake registrations, they are taking registration, they are uploading in one, but they are not paying taxes in 3. So recipient will get problems here. Since tax is not paid to the government, recipient ITC will get denied. In jewelry sector and all, in the past 3 to 4 years, many issues were faced. That's why registration has become a very complicated issue nowadays, because Aadhaar authentication has come already. Earlier, there is no Aadhaar authentication. But from the past 1 year, Aadhaar authentication has become mandate. Unless you do Aadhaar authentication, so we will not get registration immediately. If Aadhaar authentication is not done within a 1 week, then they will come for physical verification within 15 days. So then they will give us a registration certificate. This is a process which is being followed till now. But now in the state of Gujarat, another process has come into existence, that biometric authentication, biometric thumb, the SSE has to give. Now practically in GST website, thumb process has not come. Simply Aadhaar number if we type, Aadhaar OTP will go to the mobile number. That Aadhaar OTP if we type, that will get complete. But now biometric authentication has become mandatory. What has become mandatory? Biometric authentication has become mandatory. What is this biometric authentication? In state of Gujarat, they have introduced, even though Aadhaar authentication is done, the supplier has to put his thumb, because just based on credentials, many were applying. But that is not the thing. The supplier has to give his biometric thumb impression, he has to give. So now we need to purchase again biometric machines. Earlier for digital signature, usually before 3 years, there is their biometric authentication. Now we are not following, but again we need to purchase these biometric machines slowly. But now initially in Gujarat state they have implemented. Slowly they will implement in other states also. Biometric authentication, photograph of the applicant is also mandatory. Photograph means not passport size photo, sir. Photograph of the premises, name board photograph also we need to attach. Photograph of the applicant is also mandatory to get attached. Initially, it was introduced in Gujarat state. For all other states, it is under exemption. But slowly in remaining states also, they will put a focus. Next. Other latest development here is transit goods. Very, very important aspect. This transit goods, sir, we are facing problem from 17-18 onwards. Last October, they have given clarification regarding this transit goods. Transit good means at the end of the month, let us assume month 1, month 2. Let us assume month 1, month 2. Month 1, month 2. The goods invoice was raised in month 1. But the goods were received in month 2. That means at the end of the month 1, the goods were in transit. The goods were received in month 2. As per Act, Section 16, one of the conditions that was specified is receipt of goods. Unless we receive the goods, we should not avail ITC. So here recipient has to wait until the goods were received. Supplier will upload in month 1, but recipient will receive the goods in month 2. In which month recipient should avail ITC? As per Act, in month 2 only he has to avail ITC. But supplier will upload in month 1 and it will get reflected in GSTR 2B of month 1 only. But recipient should take ITC in month 2, which leads to differences in ITC claims. Even though in the year it was okay, but after the end of the year it becomes more complicated. The year is completed. If the year is completed, then in next year there are more complications here. Since the year has been completed, March month it is in transit, it will be received in April. Invoice dated is March month, but we are receiving in April. Year difference has been come here. We will enter in the books of account in April month, but they will upload in March month. Financial year has been changed here. This leads to a lot of problems, difference between 3B and 2B. Here, another full stop has been put here by the CBEC by giving a clarification that in month 1, you avail ITC and reverse. In month 1, you avail ITC, since it is in transit, you avail ITC and reverse, so that your 2B will get matched. In month 2, in all other ITC column, again you avail ITC, and in B point there is a point called reclaim. In GSTR 3B, 4D, sir, D for Delhi. In 4D table, you have a point called reclaim of ITC. In reclaim column, you write, so that department knows that this is a reclaim. Even though that means earlier we have claimed and reversed. Once again, I repeat, sir, in month 1, what we need to do for transit goods? In month 1, since the goods were in transit, you claim and reverse in month 1. In month 2, in all other ITC, again you claim. Write the same amount in reclaim column. Reclaim column will be in point 4D. In reclaim also you write. So that now the department knows, immediately it goes to red column, no red. That table will get marked into red when we write in all other ITC additional one. Even though it goes to red, don't bother. You write the same amount in reclaim column also, so that even though red is not converted into blue, department knows that you have reclaimed the ITC. In future, we don't face complications here. So transit goods, the clarification they have given like this. If we receive in lots, for example, invoice is raised for 1,000 goods, but we are receiving lots, 200, 200, 200, 200, like that in lots we are receiving. Whenever we are receiving the goods in lots, then the ITC has to be claimed in last lot. ITC has to be claimed in last lot. Until the last lot has been received, we should not avail ITC. Then initially for first lot itself, if we receive invoice, what we need to do? You claim and reverse. Later, last lot when you receive, then you claim entire ITC and show it in reclaim column so that it gets matched to you. In GSTR 9 also, we have a point that to write reclaim. Whenever we make reclaim, that means claimed, reversed, and again reclaim has been made. We have a separate column in GSTR 9 also, so that it gets matched there. So non-payment to the supplier, this one I have already repeated to you. If we don't make payment to the supplier within 180 days from the date of invoice, then what happens? We have to reverse on our own. Department does not know whether we have paid within 180 days or not, unless the case is selected for scrutiny. Only when the case is selected for scrutiny, then only they can know whether we have paid or not. When they verify our books of accounts, then only they can know whether we have paid or not. But we should not wait till that time. What they have specified here is non-payment to the supplier within 180 days, we have to reverse on our own. Another reverses column we need to write, and we have to reverse on our own. Later, when we make payment on 190th day or 200th day, when you make payment, then you can reclaim your rights. That is a process which has been given. And this is a very, very training amendment which is useful to all of us. Non-filing of 3B by the supplier before 30th November, another problematic and hectic issue, sir. Act on one point of view, they have specified that If supplier uploads GSTR 1 and for recipient, if it is reflected in GSTR 2B, we can avail ITC. That is very, very easy point and we are happy with that one. Supplier uploading in 1, recipient in 2B, it is visible, then we can avail ITC immediately. But another condition they have given, sir. Rule number 37A. Even though it was reflected in your 2B, supplier should file 3B because the tax should go to the government now. Even though in our 2B it is reflected also, supplier should file 3B. If supplier didn't file 3B, then for recipient again ITC is denied, even though it was reflected in 2B. Till now, straightforward they have given that if supplier uploads in GSTR 1 and for recipient if it was reflected in 2B, it's enough, we can avail ITC. But now again, another point they have given that supplier has to file 3B also. So how we can know whether supplier has filed 3B or not? We have to check it online. Search taxpayer option we have in GST website. There we have to type the registration number of the supplier. There we get below show return filing table we will get. That if we select, there we can know whether the supplier has filed 3B or not. This much complicated process is given. That means the buyer, sir, has to take care not only the quality of the products. Buyer should take care of quality of the supplier also. If the supplier does not upload, then recipient ITC will get denied here. Not only uploading, supplier should file 3B also, maximum before next year 30th November. Because our ITC, we have to avail before 30th November, no sir, next year. The same thing they have given. Supplier also should upload GSTR 3B before 30th November. That means, initially here I have shown you some conditions, no sir. General conditions in section 16. Original invoice should be there. Receipt of goods should be there. Payment should be made to the supplier. These conditions we know. Fourth condition, supplier should pay tax to the government is there. No. Here two conditions were there. Sub conditions. Condition number 1, in 2B it should get reflected. Condition number 2, supplier should file 3B also. Another condition, rule number 37A has been introduced. Another condition called rule number 37A. Here if you see, rule 37A has been introduced. If supplier do not file 3B before 30th November of the next financial year, because recipient, sir, if any ITC has been missed before next year November, we need to claim now. Before that date, supplier should file 3B also. Not just filing of GSTR 1 and reflection in 2B of the recipient is not sufficient now. Along with that one, before 30th November, supplier should file 3B also. How we can know whether the supplier has filed 3B or not? So here what we need to do, sir, here is we have to go to GST website. We have to go to GST website. Here we have search taxpayer. Here what we need to do is search GST number. Here we have to type the GST number of the supplier. So one of the supplier GST number I have written here. So here we have show filing table. In this filing table, you have to see whether 3B is filed or not. Here in this case, December 3B has been filed on 20th. So like this, here we can know whether 3B is filed or not. 3B and 1. We need to check here. Along with the filing of 1, 3B also should be filed. This 3B filing maximum next year, November has been given here. So here what we need to see here is finally, along with the quality of the products, supplier has to take care that whether the supplier has filed 3B or not. The recipient has to take care. Those aspects also we need to check. That is the amendment which has come here. Coming to the further amendments, very, very important aspect. This one is also practically very useful to us. Insertion of rule number 88C. Dangerous rule from my point of view. After logging to the any SSE, let me show you practically. Let me show you practically. So after logging to the GST website, after we get login to the GST website, yes, our screen is visible to all. After logging to the GST website, in services, user services, returns, tax liabilities and ITC comparison, tax liabilities and ITC comparison. Here, if you see financial year 20 to 23, there should not be any difference between GSTR 1 and GSTR 3B. In 1, whatever the liability we write, in 3B also same liability we have to clear. Till December, since now we are in January, till December month returns were filed, and there is no difference between 1 and 3B. Simply system generated summary we proceed. 1 we file correctly, based on that 3B will get reflected and we file. Here 41 lakhs is the liability to be paid as per GSTR 1. In 3B also I have paid 41 lakhs liability. For example, here if we have paid only 20 lakhs, here in December month, we have to pay 41 lakhs and as per the information given here, 41 lakhs should be paid and 41 is also paid. For example, if I have paid only 20 lakhs here, then what happens in this case? If I have paid only 20 lakhs, then this rule will become applicable. What is that rule? Now let me show you. Then this rule will become applicable in this case. So what is that rule? Let us see. If any difference of tax liability arises between GSTR 1 and 3B, okay, so insertion of rule number 88C. If any difference of liability, tax liability arises between 1 and 3B, any SSCs are, because one liability should be paid in 3B. Many of the suppliers are uploading 1 and 3B they are not filing promptly. Of course, now unless 3B is filed next month 1 also you can't file. And when there is any difference between 1 and 3B, then for those differences, department is issuing immediately DRC 01B. DRC 01B, initially intimation. Portal itself is generating and sending a mail and also online notice. DRC 01B will be introduced. The difference arising between 1 and 3B, we have to pay immediately through DRC 03. And those details should be intimated to the department in Part B. In Part A, they will give us notice in DRC 01B. And in Part B, we have to give reply, whether it was paid in DRC 03 or not. Or else, last month there is excess payment, sir. That's why in this month we have shown a short payment. Like that, the clarification should be filed in a DRC 01 Part B. Department issues immediate notice in a DRC 01 Part A. And we have to give clarification in a DRC 01 Part B. Immediate clarification we need to give. If we don't give clarification, then our GSTR 1 for next month will get blocked. And if we don't file GSTR 1 promptly for the 3 months, our registration will get suspended. For 6 months, if we don't file, our registration will get cancelled. So initially they will block, later suspend, and then cancel our registration. So for 1 and 3B, no SSC should have differences. Once again in website, I will show you, sir, for complete clarification to you. So this is the GST website. In this GST website, if you observe, there should not be any difference between 1 and 3B. In this SC case, if you see, there is no difference at all. Whatever the tax is shown in 1, same is paid in 3B. If you have any differences between these two, 1 and 3B, here if I have paid only 20 lakhs, then for this difference of 21 lakhs, 41 lakhs minus 20 lakhs, for 21 lakhs difference, what I will receive, sir? I will receive a notice in DRC 01 Part A, for which if there are differences genuinely, I have to pay in DRC 03. If there are no differences at all, I have to give clarifications in DRC 01B. Part B, I have to give clarifications that, sir, in previous months or in previous year, there is excess payment. Now I have shown it under short payment. Those aspects you have to give clarification. Till those clarifications were filed, our GSTR 1 will get blocked. Till those clarifications are filed, our GSTR 1 will get blocked. That's what they have given clarification here. If you observe, if such a difference arises, let me start once again. If any difference of tax liability arises between 1 and 3B, then portal itself will generate DRC 01 Part A. Such difference should be paid in DRC 03 and such payment details should be intimated in Part B. Sir, this month I have made short payment due to excess payment in earlier months, sir. Okay. Then those reasons should be stated in DRC 01 Part B. Whether you are paying or not, till those reply given by the SSC, GSTR 1 will get blocked there. Okay, this is what Rule 88C has given. All these aspects, sir, I can conclude in 2 lines. So GST department is suggesting 2 things to the SSC. Only 2 things they are expecting from the SSCs. It's a slogan by the CBIs. Report everything you do. Report everything you do. That means if I am going to make a sale, you issue invoices. If it is B2B, you have to report in table 4A of GSTR 1. If it is B2C, you have to report in GSTR. If it is B2C, we have to report in GSTR 1 table 7 if it is B2C. If it is export, we have respective tables GSTR 1 table 6A. Report everything you do. If the value is greater than 50,000, e-way has to be issued wherever there is movement of goods. And then any important thing is e-invoice. If your turnover is greater than 10 crores, for all the B2B cases, e-invoice is mandatory. If your turnover is greater than 500 crores, for B2C cases also, QR code generation is mandatory. These aspects, that means report everything you do, whatever we do, all the things we need to report. It might be by way of invoice, e-way bill, uploading of invoice. Still many people, sir, in GSTR 1, they are not uploading document summary. In GSTR 1, we have table 13, if you observe. We have document summaries. Let me show you. This leads to a serious implication in future. It amounts to non-maintenance of books of accounts also. So in written dashboard, we have GSTR 1. In GSTR 1, we have this table number 13, sir, documents issued. This table number 13, many SSCs were not filling. Still now, all the outward supplies from which serial to which serial you have issued invoices must be shown here. That's what the slogan I have said to you. Report everything you do. Report everything you do. All the sale transactions should get reported. Even all the purchase transactions also. ITC summary will be displayed in GSTR 3B. Import of goods, import of services, reverse charge mechanism, inward supplies from input service distributors. All these aspects, all other ITC, their reversals, transit goods, everything ITC has to be get reflected in GSTR 3B. So that's why the slogan which I am telling, which I have conveyed to you from department point of view is report everything you do. And second thing is report every details in time. This is another important thing. In time reporting is important because if you do not upload GSTR 1 by 11th of the following month, recipient ITC will get denied for that month. He has to wait for 1 more month. If it is month 1, month 2, if you observe, for month 1 GSTR 1 before 11th we need to file. If you don't file, recipient will not get ITC in month 1. For him, month 2 he will get ITC. Voluntarily, if he claims in month 1, he will be liable to pay interest again. These are the complications which were faced practically. Timely compliance, report everything you do, and such reports should be done in time. Belated compliance leads to a serious consequence not only to the supplier. Supplier point of view, they will levy late fee. Recipient also, ITC is been denied now here. ITC will get denied. No. Suppliers also, sir. Now tell me practically whether in GSTR 1 late fees been levied. No. Only for 3B they are levying late fees. For one, portal is not levying late fee. But as per section 61, if the department is selecting our case for scrutiny, then they are issuing, sir. In GSTR 1 scrutiny cases, sir, section 61, when they select, there is a standard instruction given to CBSE. For them, a guidance note is released. Standard operative procedures, SOP is released. GSTR 1, if belated filing is done also, you issue late fees. For one belated filing also, portal is not levying. Even GSTR 9 late fee. For 17, 18, 18, 19, 19, 20, portal is not levying. Even though portal is not levying, officers are levying by selecting the case for section 61 or section 65, departmental audit if the case is selected, or section 67, inspection is done, or section 66, special audit is selected. Whatever may be the type of audit, complete verification they are doing, sir. If there are ITC differences, also, if you see tax liabilities and ITC comparison, let me show you practically what the department, how in depth they are going is tax liabilities and ITC comparisons. If you see 17, 18 initial years, 18, 19 I am going here. Initial years based on self-assessment we might have done. Here if you see there is excess claim of this. Some red column has come, red color has come. 3B, 2A. There is a difference, excess claim. For these excess claims, interest is being levied. These persons might have uploaded in next year. Even though they have uploaded next year also, for the gap from this year to that year, interest is being charged by the department. To that extent, verification they are doing. Each and every point they are verifying. Simply they are not closing the case for the difference between 3B and 2A. Along with the differences between 3B and 2A, interest also they are levying. Even for the difference between GSTR 1 and 3B also. In one of the cases, recently, SSC has forgot to pay taxes in GSTR 3B, cess amount. He has reported in GSTR 1, but in 3B, cess amount he didn't pay. He has a lot of input. Cess input is there, but he failed to report in 3B. 2 months belatedly he has reported. He has paid through credit ledger after 2 months. For those 2 months, they are asking interest now. We are conveying that, sir, this amount is there in credit ledger. We forgot to report in 3B. Just 2 months belatedly, we have reported in 3B and paid the taxes through credit ledger only. Section 50 has specified that when we pay taxes through credit ledger, we need not pay interest. Only for the taxes paid through cash ledger only, we need to pay interest. Even though this explanation I have given to department, there is a rule called Rule 88A and 88B. Two dangerous rules, sir. From one point of view, department is saying that only if you use credit cash ledger, then only you pay interest. But Rule 88A has stated that any differences found between 1 and 3B, interest should be levied. I have conveyed to the officer, sir, section 50 has clearly specified that only through cash ledger only we are liable to pay interest. Section 50 is okay, sir. We levy as per Rule 88A, they are saying. So this case, I have to go for appeal. There I have to make representation. These 2 months, 19 lakhs amount cess is in credit ledger, but he failed to report in 3B. Later he has reported interest around 60,000 has come since the tax amount is 20 lakhs. 3 months belatedly, 60,000 interest has come. If he pays that 60,000, okay. Simply for wrong reporting, 60,000 interest is liable to pay for the assessment. That extent they are verifying. Simply they are not closing the cases. In depth manner, they are verifying each and every transaction. So we should also report the same thing. Still many people, sir, were not clearing. Whenever a turnover greater than 50 lakhs during a month, 1% of the liability should be paid through cash ledger. Still many people were not clearing that 1% of the amount through cash ledger. Later, department, when they are selecting the case for scrutiny, along with interest, they are levying the taxes on the assessment. Here, if you see practically in this case, here for all these red markings are in this case, interest is being levied for this gap, this month to this month, till when the positive it has come. That means to another black color, which has one here, it is in red color, no? From this red to till when it was converted into black color, till those date interest is being levied by the department. Even though promptly taxes were paid also, due to this belated claims, again interest obligation is arising. That's why each and every aspect, sir, the slogan which I have conveyed to you here is report everything details in time. If you report in time, recipient liability will get restricted. If you report belatedly, recipient again he has to bear the interest cost. So that's why report everything you do, and you have to report the every details in time. That's what we have to take care of. Okay, so this is the aspect which I am trying to convey to you. So if you have any queries, you can post in the chat box, for which I will give you a clarification. Many queries were raised here. Let me give clarification one by one. So first query raised by P. Sachinaran Garu, where GST is paid on a RCM basis by the recipient in cases which do not attract the reverse charge mechanism. The recipient and supplier agree on this. Can the recipient take the credit of RCM? The query is relating to Circular 183-184, sir. What they are specifying here is where GST is paid on RCM by the recipient. Okay. In cases do not attract RCM. Okay, sir. Here what they are specifying is even though it do not attract RCM, we have paid on our own. The recipient and supplier agreed on this. Can the recipient take the credit? Sir, actually this is not a reverse charge transaction at all. Since the supplier has not paid, you have shown it under RCM and you have paid on our own, does not amount to correct liability. Of course, you might have paid taxes and you have availed ITC. From your point of view, it's okay. But department, you cannot change the charging section. Charging section, if it imposes liability on the recipient, then you have to pay under reverse charge mechanism. That we accept. But charging section usually conveys that section 9 subsection 1 and section 9 subsection 2. Generally, the obligation on the supplier to pay the taxes, unless it was given in 9.3 or 9.4. In your case, you are simply saying that on behalf of the supplier, recipient is only paying under RCM. If it is a RCM transaction, then payment on your own and claiming on your own is correct. If it is not an RCM transaction, this is not the correct remedy. We have to insist the supplier to upload. If supplier do not upload, I have given clarification in Circular 183 and 184. Based on that, we have to take a clarification. Next. To one of my clients, the supplier has uploaded 1 and 3B after cutoff date. Okay. So the invoices were not reflected in GSTR 9 table 80. Okay, sir. GSTR 9 table 80A shows GSTR 2A input, but it has appeared in 2A, but belated upload has been done. The department has issued the notice for difference. Okay, sir. Here supplier has uploaded, but belatedly he has uploaded. For these cases also, this circular number 183 will be useful to you. Here the thing which you need to remember here is whether the supplier has paid the taxes to the government or not. Answer is yes. 100% it was sure that supplier has paid taxes to the government, but belatedly. Supplier will pay interest. Supplier, if he gives a declaration in GSTR, the form which I have given you now at the end of this session, those certificate formats also I will share to you. If supplier gives a declaration in those formats, if it does not exceed 5 lakhs, if it exceed 5 lakhs, if a chartered accountant give declaration, then based on that we can avail ITC. Officer also should allow based on that circular, because circulars are binding on the department. 100% it is binding on the department. If they do not follow circular, based on that we might go for appeal also. Appellate authority also should consider such circulars compulsory. Next. So one question is given to organizers regarding CPE credit. Yeah, you can go through it, that one, sir. How to raise CPE credit through Learning Hub, they are asking. So it's a private question which are not involved regarding this session. So any queries, you can unmute yourself and you can ask, sir. If you are unable to type it in the chat box, you can ask the queries. You can unmute yourself and ask the queries. So once again, I thank Vijayawada branch of ICA for giving me this chance to have a discussion on latest amendments. Because since these amendments which I have discussed have a major role on the chartered accountant practice, because we have to certify giving UDIN also. Unless UDIN, that department officials are verifying in the UDIN website. So since this has a role here, so this aspect which is useful to all the chartered accountants, those aspects dealing on my own. So it's feels an immense pleasure from my point of view. So I thank Vijayawada branch for giving me this opportunity.
Thank you, sir. Thank you so much for your excellent deliberation as usual, and throwing light on new avenues of certification by the chartered accountants in GST practice, and also clarifying many doubts of the members, and demonstrating the forms where we can certify. And please share your that forms also, sir, with me, and I will share to all the members who have registered for this thing. And also tomorrow we are having one more CPE program on GST and land development agreements by Sambhu Ramakrishna Garu. Please join for that also. Thank you, one and all. Signing off for today.